Good morning, everybody, and this is your S&P 500 day trade setups for today. So the Feds have come out. They've told us they are raising interest rates. Basically, what they've been telling the market for quite some time. First, the market reacted negatively to that, and then they decided, oh, it's not so bad. We've known about this, and they started buying into it again. And then we've got peace talks on the go, but then we've also got some additional COVID noise floating around in the world at the moment as well. So, to be quite honest, nobody knows what the hell's going on, and the markets included. But what I do suspect is smart money is starting to accumulate stocks which have been heavily discounted over the last couple of weeks. So there's a lot of readjustment of portfolios and adding stocks and buying into different stocks which are discounted at the moment. So I suspect we are trying to form base, and we are trying to get some structure to move to the upside. Key thing to bear in mind here, let's just start with the weekly here. You can see we've had some buyers come in down here. Okay, we had this pin bar. We didn't really break above that pin bar, and then we've had this kind of range bar, and then we've had another what's looking like this week to be not really an engulfing bar, but it's an extremely bullish bar with buyers coming in off the bottom. So for me, this is a story of three setups. In other words, you can see three tails next to each other. And here's another one there. You can see three tails right there, and then a rally. So that's kind of what I'm looking at. And if you look at the weekly, we haven't crossed over yet, but we are in pretty much bullish territory, or when I say bullish territory, but potential for a crossover. And when you get a crossover above the 20 like that, it is really bullish. So obviously we'll have to wait for next week to see if we get the crossover and see where we are. And what that would do is validate a pretty big flag, channel for that. And that channel is there, and that is a flag from where. You can take it from any one of these pullbacks, but you could pretty much take it from the COVID crash here in 2020. So, yeah, guys, we need to break through this anyway, but I suspect 5,000 is on the cards this year still, and possibly even 6,000. So it just depends what transpires in the next couple of weeks. But anyway, that's not what we're here for. We're here to find out how much money we can make in a single day. So, key thing is this trend line, and let's just make sure we've got it correct. There it is there. So that's where we're bouncing off at the moment. So the key is this trend line. So we need to get above the high of yesterday. If we can start breaking above the high of yesterday, that gives us continuation. Look at the crossover on the moving averages. Don't like the oscillators. I want the oscillators to ease off a little bit before we start buying into it. On the 3 hour anyway, we'll look at it on the lower time frames. And this big double bottom, which is neckline, is right here at 43.36. That should be tested today. I expect it to come down. Expect us to find some kind of support there. If that fails, there are multiple levels below where you can see sort of buyers coming in, and the bottom end of this is going to be here at 42.87. So that is what we're looking for. We're looking for a pullback on structure, and then we're looking for a move back to the upside. So you can see the chaos here. So the upward move through the day yesterday was based on peace talks with Russia. Well, Russia's at the peace table, and it's sounding like they're serious. My concern here is look at the diversions. You can see oscillators diverging, and then this was the 50 basis point, not 50, it was a 25 basis point hike, taking them to 50 basis points. That's the new interest rate in the US, and we fell, came back and tested the 155 EMA. And if you look to the left, you'll see it lines up with a little bit of structure. You can see quite a few tails in this area. So good area to get in. Also a little gap there. But that almost eroded all of the day's gains. And then we rallied. So if you look at what's transpiring at the moment, we've hit the top of the channel and we are now bounced off. So we're looking for For me at the moment, a break and retest of 43.61 is definitely on the cards for a really smallish position, and it's going to be like a 200 point stop loss. But yeah, anticipating a break of the channels to the upside. The only thing that is putting me off is the oscillators at the moment with this divergence. So this just means we move down to the 15 minutes and pay attention to 15 minutes. So let's wait and see what happens in the Europe Open. But if we do start breaking through 43.61, then I would expect the high of yesterday to give way. If it doesn't happen in the European session, wait for it in the US session. But 43.78 gives way and we retest, then that's game on, because that to me is a potential big flag break on the higher time frames. So that's kind of what I'm waiting for here. That would confirm the trend reversal. Remember, at the moment we don't have a confirmation of the trend reversal. Trend is still down on the 8 hour. So and it's been down for a couple of weeks since 13th of Jan basically. As when the first warning bells came that we were breaking the trend. So trend is down. What we're looking for is pullback on structure and an opportunity to buy into this, but don't expect it to happen quickly. Look at all this chaos in amongst the levels I've given you so far. So we're going to need a clear break above that. Once we've got that on the go, then this is going to be a solid area of support, and it's going to take a lot to break through this area, which would be your new line in the sand, probably around 4,400 would be your new support area for the year. Anyway, that's it for me. Definitely looking for opportunities to buy into this. Not paying attention to any bears at the moment, and but doing it very cautiously. So making sure we don't jump in at the wrong time. I'd rather wait a little bit longer and jump in at the correct time and sort of capitalize on the gains. Hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.